Wow. Call is now recorded. Awesome, 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 awesome. All right, family, let's go ahead and get this thing going. If you guys are, at any point, you guys are not able to hear or see, please speak up and I'll say, hey, Aaron, you went mute, and I'll be able to fix it. So for those who want to know the harmonic scanner, you need to understand the market first. All right, so my biggest opinion when it comes to harmonic scanner, please study FRX series 100 and 200. Please. And the reason why I say that is because the harmonic scanner is only as best as your knowledge. All right, it's one thing to use the products, but it's also very important to know what's happening behind the products. So you guys are fully aware of when you guys are getting in entries, you guys are using the market, you guys are able to make money, you have an understanding of what's going on. All right, so please study FRX series 100 and 200. And if you stay on the call all the way through, I will be giving you guys a personalized boot camp, a harmonic scanner boot camp from Go Live, from beginner to advanced, if you stay through the whole time. All right. So let's begin to, what are we looking at? So drop a 3 in the chat if you understand that the market is moved off of human emotion. Drop a 3 in the chat if you knew that the market moves based off of human emotion. Drop a 3 if you knew that. Drop a 7 if you did not know that the market moves off of human emotion. I want to know if you guys actually understand that. And the reason why I say the market moves based off of human emotion is because we are harmonious creatures. Human beings are animals. We move in harmony with each other, meaning that the bulls and the bears, the people that are competing against each other, create harmonic patterns or rhythms through the market. And what IMAX Academy did is they set an algorithm on top of that harmonic movement of human emotion, like us as people, found and measured the harmonies, and now created shapes and patterns in the forms of the butterfly, garter, cipher, bat, shark, deep bat, etc., etc. And now that's what we call harmonic patterns. And AKA the harmonic scanner was complete. So there's a couple components to the harmonic scanner I want us to understand. We're not going to do it on the indice. We're going to do it on a regular Forex pair. All right, we're not going to do it on the indice. Let's do it on a regular Forex pair, and we'll go from there. So let's find one really quickly for us. We'll do gold. Excellent. So how is the harmonic pattern continuing? So first things first, family, if you guys notice, let's look at X to A. So X to A, guys, is the original momentum move. We call that the impulse. For those who know the 3 ways the market moves, is impulse, continuation. Let's type that out. The market moves in 3 ways. It's in a phase, 3 phases, I like to call it. Right? This is called, one is going to be your impulse, right? Your impulse. Number 2 is the correction. And then number 3 is the continuation. So in the harmonic scanner, guys, when you have, when you like that as well, I want you guys to pay attention to the harmonic scanner very much so moves within these 3 phases. All right, so number 1, your X to A is going to be your impulsive phase. All right, X to A is going to be your impulsive move. Now, from A to D is your correction. Okay, you guys notice, you guys see the phases here? Let's draw it out. Let's actually draw it out so you guys can see what I'm talking about. You go here, you have your impulse that comes down, and you have your correction. And then what are you looking at for the letter D? Your continuation, for the market to come down. And that's why you guys notice you have your take profit levels down here. All right, so let's see it again, right? We're here to train the eyes. You got to train, you have to train your eyes to what you see, not to what you wanted to see. I'm gonna say that again. You are training your eyes to see what the market gives you, not what you want the market to give you. Train your eyes to what the market is telling you, not what you want the market to do for yourself. The market will always tell you a story. You just have to figure out what page you're on and what words you're reading. impulse, correction, continuation. So let's get into these letters a little bit. How do we find these entries within the market? How do we look at this again? So let's dig a little deeper. All right, let's dig a little deeper, okay? Let's look at this letter D over here. The letter D, family, is going to be your moment of entry, all right? The letter D, family, is going to be your point of entry, all right? So wherever the letter D is located, you need to understand where it's located so you know what direction the market's looking to go. So every single time you see the letter D, there is going to be a green line that's going to be cutting across it, and that's going to be your entry point. So let's go ahead and write that out. Let's go ahead and write that out so you guys never miss it. Your entry will always be the green line, okay? If it will let me, okay, we'll do that. Boom. Green line is always your entry. Now, for those who know, if the invalidation zone, if you guys notice, got the invalidation level, AKA what, family? Can we put in the chat what that is? Invalidation zone, AKA what? Everybody put in the chat, what is invalidation zone? What does it also mean in layman's terms, in normal people's terms? Stop loss. So, family, if you see your entry and your invalidation zone is above your entry point, family, you are going to be looking for bearish moves in the market, AKA selling opportunities, right? Or you're gonna be looking for market to go in a downward trend, okay? So you guys definitely wanna pay attention where your invalidation level is. And then you're gonna notice your idea goals, AKA your take profits, are going to be below the entry as well. So, and that's how you're gonna be able to find your entries. All right, so letter D, then you'll find a green line. Wherever your invalidation zone is, it's going to determine which direction the market's gonna go. So family, drop a 2 in the chat if that makes sense. We're gonna pull up another example. Drop a 2 in the chat if that makes sense. All right, for when we're looking at gold, you guys notice that the invalidation zone is above your entry point, and that if it's above, you're gonna be looking for sells, and then according to USD CAD, it's just in reverse. Wherever your entry points are, you see the letter D, green lines, invalidation zone is below, you're gonna be looking for bullish opportunities. You're gonna be looking to buy in the market. Now, there's something very important when you guys are looking at the Harmonic Scanner as well. There's going to be times that the Harmonic Scanner gives you 2 entries, or AKA 2 green lines, meaning, family, that these are 2 areas of opportunity you can get in the market and be able to capitalize on. All right, so literally, family, that is how the Harmonic Scanner works. Like, for example, if you went to this trade right here and you hopped in gold right when the letter D was formed, and there's this, and we'll get into the stew in a second, and you got in just blindly, you sold gold right here, family, you would have caught roughly 140 pips off of this trade. Crazy, isn't it? Just by simply copying and pasting. You got in gold, you sold it there, you put the ideas gold down right here at 1935 and put your dollar vote at 1968, you would have made money. Instantly take profit. And that's how the Harmonic Scanner works. It's built to be a copy paste profit system. For example, what if you got in USDJPY all the way over here where the D was formed, right? Take profits 1 and 2, got smacked. And then you let the market pull back, and then it did it again. But you may be thinking, well, Aaron, if you look at UJ, well, you see that the market hit the validation zone, so I'd have lost money. Now, family, here's where the stew begins. So I really want you guys to take studious notes on what I'm about to talk about, because now we're going to get really into it. So I actually want to do NZD CAD because it's a better example of what I'm talking about. Does everybody know the term top-down analysis? Does everybody drop a 3 in the chat? Just do yes or no. Yes or no in the chat. Have you ever heard of top-down analysis? Yes or no in the chat. because this is going to be very vital. This is what I've learned from, shout out to my boy, Chairman Tay. This is where using a harmonic scanner can go to your advantage because you're using the terminology of top-down analysis. Okay, so we have a couple people that said no. So let's go ahead and talk about it. So top-down analysis. All right. And I probably spelled analysis wrong. Oh, well. Top-down analysis is breaking down a chart from the highest time frame to the lowest time frame, right? And then we'll do it like this, AKA big picture to small picture. All right, that's what top-down analysis is. That's all it is. You're breaking down a chart from the highest time frame, the biggest picture, to a smaller picture. When you're breaking down a trade, I typically start on the daily. I just do. I typically start on the daily time frame, no matter what I'm looking at. Depending on, I like the Harmonic Scanner. This is my thing. This is where I made my bread from. I start on the daily. Now, oh my gosh, Aaron, let's look at this. It's okay. The reason why I look at the daily time frame is because I want to know trend. So I'm just going to be taking lots of notes here. Bigger time frame allows me to find the overall trend. That's what the bigger time frame allows you to do. Because now, here's why the time frame is very, very vital. If the harmonic scanner is calling for a sell, and I'm looking at the bigger time frame and it's buying, why would I get into a sell? Let's talk about it. Just hear me out again. If I'm in a downtrend and the harmonic scanner calls a buy move, why would I get in that trade? We've all learned that the trend is your friend. So why go against it? Does that make sense? All this is making some sense. And so with that being said, if you are in a uptrend and the harmonic scanner is calling a bullish move, you just gotta wait for a bullish entry, and your confidence as a trader is automatically gonna go up. Family, I want to give you guys some science. Can I give you guys some science? Like the human anatomy as a person. Just drop a 9 in the chat. It's okay if I could just give you guys some science on how we are. Okay, so let's talk human anatomy first. Let's talk your brain. Your brain cannot perceive something as good or bad unless you focus on it. Your brain cannot perceive an uptrend or a downtrend unless you focus on it. And here's why. Your nervous system is connected to your body. You've all heard mind, body, and spirit. Your mind or your brain is connected to your body through the nervous system. Remember, you get a sensation in your hand. If I prick your hand with like a nail or something and you feel the pain and your brain sends a signal saying that it hurts and you move your hand away. The thing with trading and how your brain works, this is why your 5 senses are working all the time in the markets. Because if I look at this chart through my eyes, my photons, my receptors, they're giving me an image back that my brain has to internalize and then perceive. And then I have to consciously perceive something to allow me to get a visual of what's going on. That probably just went over your head. Let's sum it up. Now, by looking like this, for example, right here, if I just look at the trade like this, my brain can only perceive what I'm feeding it through my receptors or the photons, the light in my eyes. And that my brain will compute a sensation which is sight, your senses, seeing, right? Your sense of seeing is now, and now your nervous system has to perceive the image that you're feeding it. That's why when you go to a bigger time frame, like on NZD-CAD, like up close, you're like, oh, the trade hit stop loss. Oh my God, I'm gonna move on. That's what you're perceiving through the market right now. But if I allow myself to see a bigger picture and I zoom out, right? Now my analysis, AKA what your brain is, your perception, your senses, your all the things in your mind, your brain, your nervous system. Now when I zoom out, NZD-CAD's actually in an uptrend. Maybe I just didn't get a good enough entry yet. Like, watch. NZD-CAD's in a very valid uptrend. You guys see it, up, down, up and down, up and down, up and down, and it's looking to go bullish. It's still in an uptrend, but up close, you can see that. Your first perception of NZD-CAD was, oh, the trade hit stop loss, and I'm not going to get in this trade. But if you zoom out and you give your brain a different image, a different sensation to look at, you'll perceive it as, oh, maybe I just didn't get a good enough entry. But we're in the trend that's in my favor. I had to give you guys some signs. Drop a 4 if you're catching me. This is going to be recorded. You might need to hear that again. But drop a 4 in the chat if that makes some sense. So top-down analysis allows for you to see a bigger picture so your brain can perceive a different picture of the trade analysis that you're given. Let's just make it very easy. Big picture beats small picture. Big picture beats small picture all the time. Trend is your friend. Find the big picture, it helps out the smaller picture. That's all I pretty much said, but I wanted to give you the science and why we do that. So here's the trend. We're in an overall uptrend. Great. Let's see if we just take these lines out. Let's just take this, let's just delete all this. Let's just train your brain. Remember, we're training our eyes to see. Let's just take this all out. Now, the cool thing about it is okay, we're in an uptrend. But now we got to find an entry. This is where we now lower our time frame. Now we go to like maybe the H4. We see what's going on. All right. Now the Harmonic Scanner has an EMA that's moving through it, which is this blue line here. And then there's also a very particular thing called an arrow. This arrow family is allowing you to see, okay, the scanner is going, okay, you can enter after the enclosure of this candle. Well, you guys are not even catching game. All right, okay, cool. You guys are not even catching it. Watch. Here we go. Check it out. I'm gonna give you guys how to use the scanner. Watch this. Using the scanner. Step 1, determine trend. Determine the overall trend in step 1. Step number 2, right? Okay, bet. Where's your invalidation zone? You can stop. You don't even have to get, if the invalidation zone is going against the trend, I don't even get in. Hands down. I don't even get in. Because now, if I go against the trend, look, watch this. Going against trend equals scalp. Going with the trend equals swing / intraday. Y'all probably didn't even know that too. So look, understand, if I am in an overall trend, if I'm a swing intraday trader, why would I go in for a scalp idea? So you gotta ask yourself questions. Step number 3, locate the arrow. And then step 4, enter after closure of candle. That's using the scanner. Okay, so that right there, that is like the four simplest steps I can give you. I'm gonna get even deeper. We're gonna get deeper, but as a beginner, if you can nail that, you'll be in the play. You'll be in the ball game. All right. Drop a five in the chat if you're feeling good. Y'all feeling good? Drop a five in the chat. You feeling good? You're like, okay, yo, Aaron, you storm right now. You feeding my soul, bro. You feeding my prefrontal cortex. Fun fact, family, that's where your information goes. When you first hear something new, it goes into your prefrontal cortex, and the only way it goes into your back frontal your cortex in the back of your brain, where long-term memory stores, is through repetition. So just fun fact as well. Yeah, we get into the brain today. So now let's refresh NZD CAD. Let's just refresh it. Let's bring all of its bells and whistles back, all of its chart markups, bring it all back. And let's go ahead and dig a little further into NZD CAD. And let's see if we can find a potential entry into this trade. Remember, first glance, you went, we're gonna delete all this stuff. Like I said, naked scanner. I'm not here to throw a strategy on it. I'm gonna listen to Samantha give you guys that stupid. But just naked. First glance, oh, the trade hit invalidation zone. Oh man, I'm not gonna make any money. Okay, let's zoom out. Are we still in an uptrend? Okay, are we still in an uptrend? Let's pull it up. Let's find a bigger time frame. Okay, that gives me a little bit of help. Looks like we're still bullish here. Looks like we're consolidating a little bit. Okay, let me go to the daily. Right, let's zoom out one more time. Okay, we are in an uptrend. It looks like we are uptrending. And for those who don't know how to analyze trend, I'm going to give you guys a really quick example why I'm saying that. Right? So some of us will be like, oh, well, I thought we were in a downtrend. All right, so I agree. Right, you guys see this downtrend. It's going up, down, up, down, up, down. Right, higher highs and higher lows. Let's draw that out. There's a high. There's a low. I agree. Right, Forex 101, higher highs and higher lows. Shout out to Starboy. Shout out to Manny Q. Shout out to every educator. What? Boom, bam. Here's your high, low, right here. If you guys are following me and you're more advanced than anybody on this call, this is the only reason why dynamic edge, Ignite is so profitable. It doesn't trade against the trend. Fun fact. Here's why we are in an uptrend. Here's exactly why. It's a high, low. If we were still in a downtrend, family, and we go over here, down, up, right, down, up, right, down, up, right, it didn't go down. It's literally the only reason why we're in an uptrend now. The market, it was reversing on itself. You see the market continued to go up. It kind of pulled back here, but it continued bullish, then came down. It failed to break this low. All right. If we're in a downtrend, the market could have came down. It would have broken this low, retested and dropped, but it stayed up here, came up, stayed above, and now went above again, created that low. Harmonic scanner goes bing, bing, bing. Harmonic scanner pattern, red sirens, big lights, send trade idea to all of iMastery Academy. Boom, harmonic scanner pattern pops up. We go back down to the 1 hour. You guys see the bigger picture now? Harmonic scanner went, oh, impulse, correction. Here's that. Let's get them an entry above this level here so we can ride this train to the up. Because when we go on the daily time frame, we can ride this out to 10.2. That's why we're in that trend. Hope you guys are catching me. This is just, it's gonna be recorded. This is recorded, so you guys can always go back and go, what the heck did he just do? I'm so lost. It's okay. I was lost too. I was lost too when I started. All right, cool. So shout out to Manny Q. Shout out to F4X Series 100 and 200 in his boot camp. I'm telling y'all, study that man. Study that man, Manny Q. If you guys want to get on the scanner, good with the scanner, Manny Q is your go. Fun facts. If so, if I've determined the trend, and now I want to get into this thing, and the invalidation so is in favor of my trend, the one thing that I can be careful of is a thing called market structure. Market structure is very vital because you guys see this invalidation show is not really at a true level of support. Like true support really, it's really down here. This is where true support really lies. Why? Look at the wicks. Let's even just do these wick levels. Right? I mean, we're not really at true support yet. And the way I know that this is an invalid is because I want the market to break a level of support, test this level of support again to make resistance and drop. Now I know that I am in a invalid trade. AKA, you guys remember you guys been ever in a Nick Gomez trade, and he says this is the invalidation zone. We got to wait for the candle to close below because sometimes we got to deal with wicks and all those trades. Like you guys ever been in a trade and it wicks you out and then winning a profit and you don't want to deal with that? Well, that happens, right? Because we're retail traders. So how do we protect ourselves using the harmonic scanner to allow us to have a better area of support of when I can get into this trade? And here's how I do so. Number one, I truly identify support. And it looks like the market can drop a little bit lower than what it gave me. So what I'm going to do is now, I'm not going to get into this trade right now. But here's what I am going to do. I'm going to take this invalidation line right here. I'm just going to move it. Blow your mind, right? Y'all didn't think you can move these lines, huh? I'm going to move it. I'm going to set it down here. And why would I set it down there? Well, family, remember step number 3 was that arrow. Yes or no, family? Is there a blue arrow pointing to the upside, meaning that we can get into this trade? Yes or no? Do we see? Let's zoom in on the chart. I'll zoom in. Sorry, zoom in. Do we have a blue arrow pointing to the upside to say that it's okay for us to get in this trade? I like how she said yes. I love that. There is a little blue arrow. It's right there. But it's before the letter D, so it's not valid. The most recent arrow was red. So that means the market's still pulling back. I don't want to enter in at a pullback. I want to enter in at the reversal as fast as I possibly can to continue the trend. So what I'm going to do is I now marked off support. I put my invalidation zone below the support, away from all the wicks, so I don't get wicked out. Shout out to those who got in that GU trade with steady and got wicked out and then it went in profit and smacked TP3. That was me. I was kind of hurt, but I learned if I can put my invalidation zone away from the wicks, a little bit below that level of support, I now can have a better opportunity to get in the market. And now, literally, family, if I get a bullish candle in a blue arrow, I'm going to use 0.86428 as my true level of support and still keep my 16876 area as my take profit, because here is the final thing that we all know and love. It's called risk to reward. Risk to reward. So there is a tool on the Harmonic Scanner that you guys can use. Over here on the left-hand side, it's going to be called your positioning tools. It's 1, 2, 3, 4, 5, 6 levels down. And the way to get into a bullish idea, you're going to click the long position tool. The long position tool. Now what happens is, exactly. So let's say we get a bullish candle and I want to get into the market. Because now we're going to get, longs for buys and shorts for sells. Take notes. Now I'm going to go for now I'm going to mark off a potential area for me to enter. Not right now, but potential. So I'm going to go in and probably mark off, maybe just say right over here. Just an example. All right. Now, this trade is a 1 to 1.17 risk to reward trade. So let's type that out. If I got in all the way up there. Actually, let's say if we got into the trade right now, let's just do an example. I would still get in because I don't have that blue arrow. I don't have the bullish candle. But let's say we got in right now. Family, this is a 1 to 2 risk reward trade. If we kept the invalidation zone where it was, which was up here, and we did the risk reward again, and we got it at the green line, and then we put the invalidation zone, the stop loss there, still 1 to 2. Excellent. All right. So you guys, but we don't want to run out this trade. I still want to get in. So let's move this invalidation zone back to where it was. Now I know I'm at a pretty much a 1 to 2.6 risk to reward trade. I like that. And you guys can see here, let's move this over. If you guys notice this 317 number, move your decimal place one place to the left. There's your pips. There's your pips. 31.7. That's how many pips. Move your stop loss to the left. 11 pips. So guess what you guys don't have to do on your MetaTrader 4s? No more arrow tool. You don't have to use your arrow tool anymore. You just figured out your pip count. Go ahead and use that trading plan 2.0 formula or your risk reward formula and go ahead and get into the trade if the trade was valid. Now you do your risk to reward. Figure out what lot size you're going to use. Get in that thing. And now here is the final piece. And before I pass it over to Miss Samantha, Miss Douglas, all the way from New York. Now to give you guys last bit of stuff. If the trade sets up the way you want it to be set up, we need to find our pre-man pop, don't we? We got to replace our pre-man pop. You go ahead and get your horizontal line. You place it halfway in between. Let's make it black so we can see it. Place that bad boy halfway in between. What you can also do is you can measure it. So you can take a ruler tool, we can measure it out. We can do like this. 11 bars. Oh my God, this is Stu. I totally forgot I can do this. Oh! Y'all don't even know what just happened. I just blew my own mind. Check this out. Y'all want to know the halfway point between your entry point and your invalidation zone? Take that ruler tool over here on the left. Pull that bad boy down. Look at this. Scroll that bad boy down. Let's see if I can zoom in on it. Uh-oh. Uh-oh. Y'all see it? I think my boy Derek's seeing it. Y'all see that? Oh, come on. Okay, you guys see that arrow to the right in between my ruler tool? You guys see that? You guys see that arrow? There's your pre-med pop. There's your 50%. There's your pre-med pop. Will it stay there? Will it stay there? Come on, stay there. Oh, it won't stay there. So family, pretty much can use that. Exactly. Thank you, Mr. Keelan. You come in. What about 800? Move it down a little bit. And family, you now have your premeditated pop. Guess what you can do again? And then I'll pass it on over. Go ahead and enter another long position tool from your chart. Go ahead and measure that board. Move that thing to idea goal number 2. Put that stop loss right there. And ladies and gentlemen, if you use steady, you now got yourself Some trades set up, ready to go, and the market's ready to give its thing. Drop a 9 in the chat if you enjoy the stew. Drop a 9 in the chat if you just enjoyed that stew. There we go. So let's go ahead and let's look at gold and see what we would have done for gold. Let's just do the same thing for gold. All right, let's do the same thing for gold because I think, let's see if we can find the setup. Let's see if I can find the setup really quick. It's in our favor. I don't trade indices. I don't. I personally don't trade indices. That's just not my thing.
But
okay.
I do, so they got to get ready for indices.
Uh-oh. Yeah, I'm the currency geek. Miss Douglas is your indices girl, so she's going to go ahead and give you guys that stew. Let's do a quick setup on 80 JPY, and I'll pass it on over. All right. First glance. Let's all do it together. In your first perception of the mind, do your receptors, your photons in your eyes, that's perceiving light, that's perceiving it. What do we see? What kind of trade? What kind of trade do you see? Are we buying or are we selling? We're looking at a sell. We're selling this thing. Okay, excellent, cool, we in a sell, great. Zoom out a little bit. Let's look at the daily time frame. What trend are we in? That was a very, very big bullish trend. That is a huge bullish movement. We up, baby. This is an uptrend. Some of my traders can go, oh no, Aaron, you know, we can sell this thing all the way back down to this level here and blah. I ain't here for that. Yeah, I ain't doing that. I'm not gonna, you can catch that correction move, not me. But look at that huge move. Let's go to the 4 hour. We still kind of bullish, huh? Still pretty bullish. Now, if I'm gonna get it like still pretty bullish, family. Off of the strength and the muscle of me right now, family, I'm not getting in this trade. With all due respect, I'm not gonna get in this sell. This thing bullish like crazy. This thing bullish. I ain't getting in. Let's find another pair. That's how I do it. That's literally how I do it. Let's look at oil. Okay. This thing looks like it's gonna buy. Great. Boom. Day one. Uh-oh. Uh-oh. The scanners tell me to buy. And the trend is what? Buying. Let's go to the 4 hour. Let's confirm. It's also, this thing is also buying. Okay. Let's go to the H1. Facts. Okay, bet. So, is the trade ready just yet? No. Let's go to the M30. Maybe the trade's ready there. Excuse me. Not ready, but we determined the trends in our favor. The Harmonic Scanner is calling the trade in our favor. Let's go ahead and try to find some entries, some potential setups. Now, look at previous support. This is where you guys make a mistake. Look to your left. There's support. Support's not here. I'm gonna make those lines black so you guys can see what I'm talking about. Make them thick. Thick lines save lives. That's why I've learned that. This is support. This is not here. You're gonna get faked out. You're gonna lose all your bread. Why? Because the market's gonna come down here, not here. Look to the left. Look to the left. Look to the left. Areas of support. The market came down here. Yes, it's come here and it's come here, but the market dropped to here. So if I'm smart, I'm gonna make the proper adjustment. Guess what I'm gonna do? I'm gonna go ahead and move that invalidation zone below that level of support. I'm gonna let the market come to me, and that's okay. We're still not breaking trend because the market did a down, up. It didn't break trend. It broke trend if it kept selling. But I'm gonna go ahead and be safer for a better risk to reward. I'm gonna put the market invalidation zone below this entry, below that wick, maybe a few pips, maybe right there. Say, for example. All right, so bet. Now, I go ahead and look to where I want to enter a market. I'll mark off my level of support, where the support is, which would be right down here. Now I make the decision, okay, I'm gonna eyeball the market and let it come down to this zone. I'm gonna go ahead and put my long tool, my first long tool, let's say at the middle of the zone. I'll put my first entry in the middle of the zone, drag this to idea goal number 1. Family, right there, you're looking at roughly a 300 and you guys looking at almost a 300, no, hold on, about a 3,000 pip move. That's huge. A 3,353 pip move. Crazy. It's a lot of pips. It's a lot of pips. I go in here, adjust my stop loss. About a 2 to 5, 1 to 2 trade, 2 to 1 ratio. I like that. I like those odds. Maybe I don't have the account size for that. That's fine. Make adjustments. Right? And this is UK oil, so this is something you need a bigger account, bigger risk. Understand that. You guys see the market's coming down here. You would have lost your money already. You would have been mad. Let the market come to me. Let it give me some indications of a return, and it will go up. Now I get my ruler tool. I go ahead and measure my my entry halfway again. Drag that down. Look at my arrow real quick. Let's see where I'm at there. Now I go ahead and get that ruler tool. Let's go ahead and find that halfway point. Oh man, I didn't put it on there. Here we go. Find that little area. It looks like 105, 500 is gonna be my pre-med pop area. I'll go ahead and mark that off as close as I can. Boom. There we go. Place another long position tool at that entry point. I dry that bad thing up. And family, by you digging yourself 2 potential entries is because, let's say, for example, the market comes down to your first entry and still doesn't give you that bullish idea. And then it comes down to your second entry and still doesn't give you that bullish idea. Guess what you get to do? Not get in the trade. But if it gives you the bullish idea at your second entry, get in the trade. You've already set your stop loss. So family, that is all the store I wanted to give you. If you guys learned a lot of valuable information, if you guys have really, really learned some gems, and you guys think you can practice this and go ahead and implement this, family, drop some fire emojis in the chat. Family, we're at 59 people on this call. Are you serious? You'll stop playing with it. Family, please drop some fire emojis in the chat. We're going to go ahead and pass this over to the one and only, guys. I want to go ahead and enter fire properly. When it comes to Miss Douglas, I want you guys to understand who this person is. All right, so let me make my phone the host. Let's go ahead and make my phone the host. Oh my goodness, y'all don't understand what just happened. Y'all don't understand who's on the call right now. Ooh, y'all don't even know. All right, so the reason why I wanted Miss Douglas on the call, she doesn't probably know, is that I've been actually studying her and watching her for about 3.5 months now. And every day, Blueface, SPX. I'm sitting there, I'm going, what is she doing that's just so consistent? And I just couldn't do it. I just couldn't think. Like Big C100, Rico Money was taking trades from her. I'm like, how is she doing? I've never spoken to her. I never met her person, but then the first time I called her, I was on the way to Chipotle. And I said, would you be down to do a training? And she was like, yeah, I've always wanted to do a training with you. And the moment we started talking, it was just automatically, I went through her Instagram and I studied her, what her captions were, what her words were. And I can automatically tell you right now that Miss Douglas is a person who has been on every single training, every single day. And you guys have probably even know it. Platinum 1000, let's not even think about the fact that she's Platinum 1000. Let's think about the fact that she is so consistent that she only needs to attack one pair and be able to feed her family. She can attack one pair consistently every single day and she's able to feed her family. And the reason why I wanted a female on this call, because right now, the women have been killing the trading world. Shout out to my ladies. Where are my ladies at? Where my ladies at? Tell me we here. Where the ladies at? Y'all make some noise in the chat, family. Where the ladies at? Because the ladies right now have been killing this trading thing. But I also felt that it is perfectly fine for a woman to come on a platform and speak her knowledge and speak herself. Because sometimes the trainings are mostly run by men, but we've been seeing a trend with Tia Bolden running a training. Then you had Miss Rachel running a training as well. And why not add Ms. Douglas as well? Because I also think that sometimes, do you have to be a chairman to make a lot of money in this market? And I think a lot of us have this misconception that, oh, I'm going to hit chairman first and then I'm going to become a profitable trader. Or now I can have the big $1,000 accounts. No, you can be unranked and still be more profitable than a chairman because I've seen it. You can be a platinum 150 and still be more profitable than an educator. I've seen it. Guys, I'm a platinum 1000. I host a live HFX session with my boy Kel every Tuesday and Thursday. I'm only P1. But at the end of the day, it's not about where you're at. It's not about who you are. It's about the discipline that you have. And Miss Douglas is a perfect example of somebody that has excellent discipline. And let me get out of her hair. Let her have the floor. Family, please drop some big platinum 2000s for the one and only Miss Douglas. I'm going to make you the host, love. I have my notes. You got 60,000 people ready to learn to be educated from you. I'm so happy and grateful that we even had the chance to speak. And I can't wait to see what you're going to be in the future. Let me get out your hair. Love you. Let's go.
Let's go. Let's go. Let's go. Let's go. Let's go. Drop some red hearts in the chat for my brother Aaron, man. Because I don't know about you, but my notes is full. Right? I got 2 pages full of notes, guys. And he actually told me something new. And if you guys don't know me, my name is Samantha. I'm actually going to drop my Instagram in the chat for you guys, because we're all family, right? And if you guys have any questions, concerns, whatever the case may be, always feel free to hit me up. Because whenever he hit me up, it's crazy that he did, because he says he was studying me. I was studying him the whole time too for the last 3.5 months. You know what I mean? So it's just the alignment was crazy, And Aaron is somebody who's consistent every single day, showing up for the family. So if you're his family, keep on dropping those red hearts, guys, because at the end of the day, those who show up the most are gonna get the most results. And that's one thing I had to start. So a little bit about me, guys. I'm 22 years old, from the Bronx, New York, NYC stand up, right? And I started trading during COVID, right? I started to trade during COVID. I was in college at the time, and I was going to school online, as most of us was, high school, college, whatever the case may be, you was going to school online. And one thing I had to realize was, okay, I'm going to school for business, but I'm also trading online, right? And one was making me money actively and one wasn't either. Everybody told me I should, be a teacher, but I don't want to deal with little kids, right? So long story short, I ended up withdrawing from school and took this full on, was able to hit platinum 1000 and, just learn the skill of trading. And once trading is in you, if you're aligned, on this call, started trading, just know it's a decision, right? So with that being said, guys, I made a decision to focus on one pair. So I'm gonna go ahead and share my screen. Let me know if you guys could see my screen. Once you guys could see it, drop a 111 in the chat for me. Beautiful, beautiful. We still got 58 strong on this call. I love to see it, right? So the currency that the indice that I've decided, works best for me is SPX. And why is SPX? Gold Cup. Gold Cup is really my go-to product, guys. Who loves Gold Cup? Drop a Gold Cup in the chat if you plugged into Gold Cup. Kim, Lano, my 2 favorite educators, right? And then they went ahead and added Anastasia, which is even crazier, right? Everybody you need is on that one product. But the thing about the Harmonic Scanner is, I love the Harmonic Scanner because no matter what package you have, whether you have the DCX scanner, whether you have the HFX scanner, whether you have the regular Forex scanner, or even if you're elite, you're going to be able to access Harmonic Scanner. And this Harmonic Scanner, like Aaron went over, has currencies, but it also has indices as well, which I love. All right. So I'm going to be able to teach you guys a strategy called the MA Cross strategy today that has been able to help me be consistent every single day, guys. Like, it still baffles my mind to this day that over the last 3 months since I made that decision too, every single day, profitable. Even if I take a loss, I'm going to make sure I'm end up profitable for the day, right? So with this strategy, it's very, very simple. Okay, so what we're going to do is we're going to delete all of this, just like Aaron did. And we are going to search US 500 on here. but SPX 500, that is what I'm going to be going over. So if you know anybody that is into indices, that trades indices, make sure you send them this call, because I will be doing a full markup, top-down analysis that we just learned from Aaron himself. You'll guys be able to take these markups, do it yourself, and have these so you guys could be consistent every single day right along with me. Okay? Beautiful, beautiful, beautiful. So let's get started, guys. So the first thing we're gonna do is, this is US 500, SPX 500, right? And the first thing we're gonna do is we're going to go on the higher time frame. Okay, so what I like to do is I like to go to the daily, to the 4 hour. In this case, I am going to start on the daily, right? So all you're gonna simply do is you're gonna look for support and resistance zones in the market, and you're gonna mark it up. So let me just zoom out a little bit, right? And for your daily and 4 hour, you are going to use a black line. Okay, so your daily and your 4 hour is going to be a black line. So all I'm going to simply do is just mark support and resistance zones that I find within this market as B real quick, right? This is the high, so we definitely got to get that in there. Let's see. Okay, beautiful, that right there. And you just have to train your eye literally to see this, guys. When I first started trading, like literally me and my friends, no matter upline, downline, sideline, like we was all just trading, and we knew like, okay, we'll hop on the charts together and just practice this. So like Aaron said, you train your eye to see something is gonna make this trading game much, much easier for you. And the more you actually practice doing it, you know, you can hop on Go Lives, they could give you markups, they could do all of that, but until you do it yourself, it's not going to really hit. You know what I mean? I literally hop on Kim sessions every Sunday, 10 p.m. If you know, you know. If you at 1P and you've been eating off of Kim sessions, drop a 1 in the chat, right? Because Kim gives up 10 setups every single Sunday that you're able to now go ahead and mark up and have for the week. Have for the week. So imagine 10 setups that you already have, and all you got to do is wait for it to activate, right? So that got me actually practicing marking up support and resistance, plugging in with Kim, right? Shout out Kim, shout out Lano, shout out the whole Gold Cup fam, right? So that's the daily time frame. I'm gonna add one more, a few more actually. I'll add a few more in here so we could go down. This is the support, beautiful, strong daily support, beautiful, right? And yeah, so that's your daily. So I'm gonna actually type this out so you guys can have it as well. And if I talk, sometimes I do talk too fast. So if you guys have any questions, just drop them in the chat. I'll definitely make sure to answer. But so a black line, so your daily / 4 hour is going to be a black line. Your 1 hour is going to be a blue line. And your 15, did it just delete, guys? It did. Hold on, let me take it over again. Daily / 4 hour is black. Your 1 hour is blue. And your 15-minute and 30-minute is green. Okay, let's just change this here. Beautiful, beautiful, beautiful. Okay, right? So now what we're gonna do is we are going to go down to the 4 hour. Right now we're gonna add some 4 hour zones in here. You know, you could just zoom out. And now you're gonna add some 4 hour zones in here, okay? So let's see, beautiful right there. I didn't mean to do that, right? So I'm literally just identifying, guys, support and resistance zones, right? And support and resistance, if you don't know, is basically like the floor and the ceiling. Support, it holds the trade. right? So if you have a floor, right, and say this is the floor, and you jump down to the floor, you're gonna come back up. You cannot go through the floor, right? You're gonna come back up. At a resistance, if you hit the ceiling and I hit the ceiling, I'm going up. I'm going to come back down. Okay, so out of support, you want to buy. Out of resistance, you want to sell. Okay, now let's drop down to the 1 hour. We're gonna drop down to the 1 hour. And now we're gonna identify some key zones in this 1 hour. Okay. So now I'm gonna look at the 1 hour. Boom, right there. Let's change this to blue. There, beautiful. Right here, beautiful. So resistance, beautiful. Let's go back up here. So you also just look to the left, you know, you can take this like tool and just move your screen on over. 4678. All right, guys. So let's see. Like right here is also a good 1 hour zone as well. Boom. And I'm just gonna leave it as so for now. Okay, screenshot, 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 guys. Make sure you screenshot this. And then I'm going to drop down to the 15 or 30 minute. I personally like to do it on the 30 minute. And then you are going to get a line and make it green. And now you're just looking for key zones in this 15 minute, okay? Boom, beautiful there. Let's zoom on in a little bit. Let's see, even here. So now we're identifying these key zones on a 15 and 30 minute, and these are gonna give you your entries, guys. Okay, these are going to give you your entries. I don't really like that here. Literally, like I said, the more you guys do this, the more and more your eye will be trained to see these zones, okay? This is actually, all right. So I think I'm gonna leave it at that. All right, I'm gonna leave it at that for now. Drop down to the 15. Let's see if we could get some more. Beautiful, beautiful, beautiful for current price. Let's see. Yeah, I'm gonna really just leave it like this for now, guys, okay? So that is how you guys mark up support and resistance, right? That's the first step. Identify your support and your resistance, okay? Now, secondly, we're gonna go ahead and add our indicators. You see right here, we have this F, this function. If you guys also go on your MetaTrader 4 screen, you'll be able to see that same exact F in the middle of your charts page. It looks kind of like this. If you guys can see the F right in the middle on top. That you can also add indicators as well. So you guys can actually take this and add it to your MetaTrader 4 charts as well, if you're not able to, access the scanner when need be. So the first indicator that we're gonna add is called your moving average. So you're gonna click moving average one time. And then you're gonna double click on this blue line because that's your moving average, right? So let's zoom in so we can actually get this blue line. You double click it, and your MA stands for moving average. So your length is going to be 4, your source is closed, your offset is 0, okay? Screenshot this, save this, so you could give it out to anybody that ever comes into your life. I'm telling you, it's life-changing. Your style is going to be blue. You're gonna thicken the line because me, I'm blind, so I have to thicken this line. And you're gonna press OK. All right. You're gonna delete this other blue line they have here. This is another EMA, but we're not gonna use the one that they put on the scanner itself, right? Then you're gonna search EMA. So now you're gonna search. It's gonna be moving average exponential. Okay, so you're gonna click that 2 times. 1, 2. All right. Now for the first one, Your length is going to be 50. Your source is closed. Offset is 0. And your style is going to be black. And you are going to also thicken that line, okay? Now your last one, you're gonna double click on it. Your input is going to be 200. And your style is going to be pink, okay? Yo, this is such a beautiful trade this morning. Shout out those who caught the sell. Oh my goodness. Oh my gosh. Oh, just looking at this makes me so excited because guys, you really about to learn some real stuff. All right. So those are the 3 indicators that you need. So we have our 4 MA, we have our 50, which is our black line, and then we also have our 200, which is our pink line. Okay. The first MA input was 4. I'll go back to them real quick. So for the first one is 4, source is closed, offset is 0, and it's a blue. So make sure you guys screenshot. Make sure you guys screenshot. For the first EMA, it's 50. Style is black. Make sure you guys screenshot. Make sure you guys screenshot. And then finally, our 200 EMA. Length is 200. Screenshot this. And then your length is going to be pink. Okay. Now, third step. You are going to turn on your Hakanashi candles. Okay. Hakanashi candles. Actually, before I go into that, let me tell you what the moving averages actually do, so you know the purpose of them, right? Indicators. Indicators indicate where price is going to go. They do not tell you where price is going to go. They indicate where price goes. So it may not happen right then and there, but they will show you where price wants to go. Okay. You have a 4, you have a 50, and you have a 200. The higher the number, the stronger the confirmation. Okay, so the 200 is the strongest EMA. Okay, 200 is the strongest EMA. Your 200 will show you the overall trend. Okay, remember I haven't talked about trading with the trend? The 200 will show you your overall trend. So in this case right now, you see we were in an uptrend, right? We're above the 200. We're above the 200. We're above the 200. We're buying, we're buying, we're buying. But what happens right when we get under this 200, guys? Notice, drop, right? So that's what the 200 shows you. The 200 is going to be your best friend, all right? Now, after you turn on Hakanashi candles, who could tell me what does Hakanashi candles represent? Who could tell me what does Hakanashi candles represent? Beautiful, beautiful momentum, right? So zoom in here just to show, right? When we have, now this is some real sauce, right? This is really, 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 really important. Let's see what tool I want to use. Let's get some shapes up in here, rectangle, right? I'm going to draw this out. This is going to be red. This is going to be blue, all right? So when you're looking at a bearish candle or a selling candle, a red candle, right? These boxes here, they're called candles, right? Each box. This body, right? You see where it's full, where the square is, right? The squares, those are called bodies. On a sell, this is very important, guys. Your top of your box or your body is going to be your open, right? And then the bottom is going to be your close. On a blue candle or a bullish candle, your open is going to be at the bottom. And your close is going to be at the top. Okay. Now, notice we also have something called wicks, right? Wicks are these lines that come out of the boxes, right? Now, what do wicks show us? Wicks show us like price once went there during that specific time frame, but it could not stay there. It did not stay there at the end of that time frame. The open and the close show you where it was when the time frame started and when it stopped. So for example, right now we're looking at the 15-minute. So in this candle, let me just mark it off. In this candle, right, our open was right here at 45.73 and our close was here at 45.47. It came down here all the way down to 45.33, but it did not stay there. So this candle was at, let me change this to New York time right here. This was at 15, so this is about 3:45. 3:45. At 3:45, from 3:45 to 4 o'clock, price at some point came down here, but by 4 o'clock finished, it closed here at 5.4548. Okay. So wicks show price went there, but does not want to stay there. So it's showing signs of rejection. That's what wicks show. They show signs of rejection. Okay. Now, why is that important? Because, like Aaron said, sometimes you could get faked out. Sometimes, you may think it's going to continue, but it's not, right? So you're identifying key zones where price once went, but it doesn't want to go back in that direction, right? For example, I'm not going to go too deep into it now. I'm going to show you when I actually go to the example, all right? So, but for the strategy itself, right? That's just how candles work. So drop a 2 in the chat if you guys understand how to actually like read candles, the open, the close, wicks, things like that. Drop a 2 in the chat if you guys got that. All right, let me just go ahead and delete these real quick. Let me actually save this as PX. Yes, one thing about the Harmonic Scanner too, make sure you save your markups, whatever the case may be, because if you don't, sometimes it may refresh, something like that. So all your work could be for nothing. Okay. So how does this strategy work, Sam, right? You told me all these indicators. You told me how to identify support and resistance. You told me about Hakanashi candles, but how can I actually execute this strategy? Like, what is going on, right? So let's get into the real stuff. All right. So is there any questions before I move on? Any questions before I move on? Drop a 2 if we good. Okay, beautiful, beautiful, beautiful. So MA cross, this is the name of the strategy. So what do you think MA cross means, right? I wish in high school they taught me about this strategy. I never knew it would be so easy to get paid from lines crossing, and shapes. When I first learned this strategy, I said, wow, if they taught me this in high school, geometry, trigonometry, I took it all. AP statistics, I took it all. I like numbers. That's the reason why I also decided to get into trading, because I said, okay, I like math. Cool. But honestly, it's not even a lot of math. It's just being able to identify, right? These patterns in the market. The market's always going to do once it once previously did. It's only going to go to where it once previously was, right? So with this strategy, you want to identify where your MAs are crossing, right? So the first cross we had, I'm actually going to go over because I was actually able to catch all these. I was able to catch this buy down from 45.20 on Sunday. I want to believe it was that Sunday? Yeah, the 28th or Monday. Yeah, Sunday going into Monday. The markets opened up and we were actually, my organizer, we were actually able to take this buy all the way down here from 45.20. So the first step you guys want to do is identify where the MAs are crossing, right? So you see we're above this 200. So obviously we're looking for buys, right? We're looking for buys because we're above the 200. And here we had our MA and EMA crossing, right? So we have our 4 and our 50 crossing. So here would have been a potential entry, right? So I'm gonna mark this right here. Let me actually zoom in, right? So here, I'm gonna just move it over here so you guys can see how it actually looked, right? So we had our 4 and our 50 crossing, and we have a blue candle. Now, for a blue candle, you want a flat bottom. And for a red candle, you want to have a flat top. So that means at the bottom of the candle, at the open, at these opens, you do not want no wicks coming out of the open, okay? So flat top, and you'll be able to identify that. So here, right, we have a flat bottom blue candle crossing above our 4 and our 50, right? So you see how price closed above? The importance is the close. It has to close above, right? So they crossed, they closed above. So boom, I got a flat bottom. I have a flat bottom, right? Now I will usually wait for 1 to 2 candles to have 2 flat bottoms because that shows momentum. So I have my second flat bottom here. Now my close is right here at 45.33. So this is an entry that you would have had. Now, being that you have your support and your resistance marked up already, right? Now that's how you'll be able to identify your stop loss and your take profit, because what happens in the market, price goes to where it once previously was. So in this case, I see 45.33. And I look to my left and I see that I'm at a 1 hour zone. This is a 1 hour zone, right? 1 hour zone, that's pretty strong, right? That's pretty strong because you're executing off the 15 to 30 minute with this strategy, guys. So for a 1 hour structure to be respected, and you're looking at the 15 minute or 30 minute in 15 minute in this case, or the 30 minute, right? And you got the cross on that time frame, beautiful. So now this will be my stop loss. And because, all right, so let's use what Aaron just taught us, long position, right? So I'll put that there. My stop loss will be down here at the previous structure. And then I will take it up to the next structure, which is this 4 hour structure. And beautiful, boom. You have about to 1 to 7.5. So in that case, you know, I would have actually increased this just to the 24 by 3 points. Just so I can have a 1 to 2 risk to reward, right? So that's how you identify, you know, your stop loss and you take profit with that. But notice how, guys, even before you had this, you know, MA cross here, price was wicking. And this is the importance of wicks, guys. It wicked 1, 2, 3, 4, 5, 6, 7 times. So clearly it's like somebody calling your phone. Call me once, I didn't answer. Call me twice, I'm not answering. 3, 4, can't get into my phone, right? So you can't get in, right? So I noticed, okay, price does not want to go down. It wants to go up, right? It wants to go up because nope, not down, not down, not down, not down. Boom, got this blue engulfing candle. And then we had a flat bottom and flat bottom again with the close above. Beautiful. And remember, we're staying above this 200. So you know you definitely want to buy. Okay. An example here, another good example here, guys. Let's just keep on going, right? So we was able to catch this, right? Respected our 4 hour structure, right? Now, one thing I have to say is here, right? We came back, came up, down, right? We came back down below this 50. But notice how we stood above this 200, guys. So you could have also caught the move for the sell as well at the same area, 45.33. Could have caught the sell here back down to 45.20. Why? Because what was once a support, it broke through, came back, retested, still a support, right? Still wicking, right? I still had the opportunity to get in, guys. And then here, came back below our 50. So now we have another trade here. This is another trade, right? This is up. So now what you could do is you could go ahead, enter, because remember, this is a 15-minute zone. So now in our 15-minute zone, we have our 4 and our 50 crossing. We had 2 flat bottoms. This is showing me momentum. And I'm seeing this consolidation here, guys. You see this consolidation? The market moves in 3 waves, 3 directions. It's gonna move up, it's gonna move down, or it's gonna move side to side, which is consolidation. This consolidation is showing me it's indecisive. It doesn't know what it wants to do. So yes, we are in this overall uptrend, but the thing about this strategy is it's always gonna pull back to the EMA, the 200 EMA. So I know, okay, I'm getting signs of rejection already. It doesn't want to go further up than the SAM right now. It doesn't. It's showing me we got this doji here. So it wants to change. I'm getting all these red flat bottoms, but they're not closing below. So I'm not going to enter in, but I'm seeing it wants to. It comes back up. Now it clearly does not want to respect this, right? Now this is a resistance zone. Now this becomes a resistance zone because I got, look, 1, 2, 3, 4, 5, right? Wicks to this side. So I know, okay, price is not wanting to go up right now, Sam. So you're not going to be looking for buys, right? You're going to be wanting to look for more sells back to your 200 EMA, right? So was able to catch this 450 cross right here, and you were able entry again 45.33 around there, 45.32, and you'll take it right back down to this 200. Now your 200 is also, notice how it's crazy. The 200 passes through this 1 hour zone, guys. It passes through this one, literally lines up. Do you guys see that? Drop a 1 if you guys could see how the pink line clearly matches with our 1 hour zone. So again, like Aaron said, you look to your left. You look to your left, and what you can see, this is a support. So boom, on the sell, I'm gonna take profit at a support, okay? Now our 4 and our 50 never crossed. I mean, our 4 and our 200 never crossed. It never crossed below. So this is not a valid entry because you did not get a full cross, right? This would not count as a sell below the 200. No, because we're getting a rejection here. Once again, reject, reject, reject. We want a full candle to close below. Okay, boom, like that was the correction. And then boom, what we get? Impulse. I already knew I brought at 45.20. This is a strong support. This is a strong support. Price wicked here, came here, closed below, but came right back up, wick, right? Wicked here, perfect, beautiful wick. So this is where I want to look to buy again. So now I'm at my 200. Now I'm in the uptrend. Now I'm looking to buy again. So boom, was able to catch 45.20 again. And you're going to take that straight up. This is where it's really, really important, guys, to pay attention to your crosses and how close they are. You notice how here, yes, we had a 4 and a 50 crossing, but you see how like we had this space here to between this 200. Notice how price touched the 200 and came back here and got this cross. I know that this move is gonna be at least 2 times the correction. Okay, your next impulsive move is going to be at least 2 times the correction. So what does that mean, Sam? Boom, we first originally got this buy. We caught the correction down, up, correction again. We caught this move down to the 200 because we had our 4 and our 50 crossing. Now we respected our 200, crossed again. This is now another entry, guys. So now you have another entry here at 45.37. So now I know a good buying zone is in between 45.33 and 45.37 because previously that's where I brought. And now that it was a resistance because it broke through, but then it broke back above now becoming that support above our 50, right? So now price is holding above that 200. It's holding above that 50, and we have space, guys. Like, look how much space is in between here. Look how much space is in between here, right? So we know, okay, this trade is going to keep on continuing in this upwards momentum. All right, take it back to the next 4-hour structure. So this is another trade idea you guys could have had right here. Let me just zoom in a little bit so I could be accurate with this, right? So we got our 4-hour 50 crossing here. Previous structure, right? I don't even like this. I will put it right here at this 200, where we had this previous wick here. I usually go for 8 to 10 points on my stop loss or the previous zone. And then, right, boom here. So you're risking 10 to gain 17 to the next structure, right? Now it breaks structure. Notice how our black lines is a daily and a 4-hour support. The higher the time frame, the higher the confirmation, guys. So we're having straight. Do you guys notice this? Flat bottom, 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 flat bottom. Literally flat bottoms straight up this, right? So I know it broke 4-hour structure. This was another entry right here at 45.55. And what am I going to do? Take it to the next zone. And at 45.58. And what did I do? Take it up to 45.69. Again, it broke structure. Continue, continue, staying above, staying above. What did it do? It broke 1-hour structure, right? Price break structure, especially on a higher time frame, is going to the next zone. I promise you that, especially on the 4-hour and 1 hour. Those are really, really important. That's where I definitely like to look for my zones at, because if it breaks on a higher time frame, oh yeah, trust me, you're in for a ride. Okay. Countless bags. No, for real, right? So continues on this uptrend. Again, pulls back to the 50. What am I gonna do? I'm gonna look to buy because it came down to my 50, but did it cross below my 50? No, it did not. So again, 45.90, another entry, because it's coming. Notice how, again, the 50 crosses above this 1-hour zone, but it's not coming below. It's not coming below. So again, I got this consolidation here, another form of consolidation. So I know, okay, let me see what price wants to do here. Doesn't want to really go any below, doesn't want to go any higher. It pulled up. Okay, now let me look for the correction. It came out of this consolidation. Boom, pulls back to the 50 EMA, another entry you guys have here. And again, where are we taking this to? The next 4-hour structure, right? So now we've got a 4-hour structure, and this is, where current price was, right? So I was able to catch that buy literally from 45.20 all the way up to 46.33. I'm actually 46.40 was the top off on that. And you notice, right? Price, it just 1, 2, 3. It's not given next zone, right? It's not given next play, right? It's not given continuing buying because it's not breaking structure. What is that called? Resistance. It is resisting to continue buying. So now that tells me, okay, Sam, all right, we're gonna see something happen because it touched 1, 2, 3 times. All right, 3 times. Now notice how we have a cross back below our 50, guys, back below our 50. Now, this is a 15-minute zone. So I'm actually going to mark this up here because we are on the 15-minute and I can identify this clear as day. It's a support, right? Support. We came, we were resisting, came back down, broke through. So now this is a support. Stood above here, stood above, stood above, stood above. Doesn't want to break below, right? Doesn't want to break below. Doesn't want to break below, right? But here, notice how we have our 4 and our 50 crossing, right? So here, 46.14 was that entry. Actually, this is how a good lesson that I was able to take last night. I did hit stop loss, even I hit stop loss, right? I noticed, okay, I'm on a 15-minute time frame. So again, let me just mark up one more zone here, right? So on this 15-minute time frame, I'm in between 46.09 and 46.21. You see this consolidation we have, it doesn't want to really do anything, right? It doesn't really want to do anything in these zones. So I know, okay, if I have my 4 and my 50 crossing, I'm going to take it to the next zone, right? So here was an entry at 46.14. We have our 4 and our 50 crossing here, but then we get the flat bottom, flat top here. So this will be your close, and that'll be 46.14. And I'm gonna write this out because you could, okay, so for stop loss and TP, how to set it, you could do zone to zone, or stop loss is going to be 8 to 10 points. TP1 is 5 points. And 1 point is 10 pips, okay? 10 points. And TP3 is 15 points. Okay. There we go, right? So you could do zone to zone, or you could, use these points and identify your support, your stop loss and take profit. Okay, so in this case, here, when we entered at 46.14, at 46.18, right? What did we do? We took it right down to this next zone, which was 46.09. So that's 9 points, right? So either you could have set that for your TP1, or you could have calmly hit TP1 and TP2 within 5 to 10 points, right? So let's actually draw that out. What does that look like? Now we're gonna do short position because we're selling. We're gonna come here, 10 points, and notice how that's above this wick right here, literally above this wick. And if I hit 5 points, let me know. Was my TP hit or was it not hit? If you just did simply 5 points, was your TP hit or was it not hit? Right? Now, if we go for 10 points, let me know. Was our TP hit? Beautiful, beautiful, right? Then you move your stop loss to entry, and then eventually, we got hit at break even, right? But now, this is where, right, come back above. We got our 450 crossing, but right, I already noticed this was resistance, right? This was resistance. Price is wicking up here. So I don't want to look for anything if it's not above this zone. Okay, I need a full close. Boom, came back down. See, I'm getting wicks. 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 450 cross again. Now this is where, the real move happens. So yesterday, boom, right here, we had our 450 cross. This will be your entry right here at 46.09. Again, previous zone, or 9 to 10 point, 8 to 10 points. So I could just do 10. And then you're going to take it to the next zone. In this case, was a 1 hour structure. And boom, 19 points. So bare minimum on a 0.01, you would have made $20, right? And that's a 1 to 2, a 1 to 2 trade, right? And it even went further. It went down also to 45.82, right? Which was clearly, look, guys, you see how it wicked perfectly, like perfectly to these wicks, into that form of consolidation, right? Even if I identify here where these 2 wicks were, Price came here, but it did not stay here. And guess what we did, guys? I was able to catch the buy from 45.83, 45.85 off this wick. Sniper entry. Why? Because I look to the left and I see, okay, price broke over here. It broke structure over here. So this is a strong support. It's a strong support. So now I caught the beautiful sniper entry, right? And then what did we get? Again, we got our 4 and our 200 crossing, right? So we would have entered right here for this buy, right back up. And what are we doing? Taking it right back up above here. And then this is another entry, again, 46.08. If you didn't notice, these MAs are crossing in the similar zones, guys. And as you continue to track your trades, write down your trades, right? Write down your entries, write down the times you were taking it, the pair, you'll notice these same entry points, guys, same entry points. Again, called the buy, right? And then this is where, you know, the real stalls comes in because we crossed below this 200. So yes, I could take this buy back up, but I know price is gonna have to come back down and attack under this 200. You notice how we were getting these higher highs, right? Price, like Aaron just went over, we're now in a downtrend because this should have pulled back here and came back up, but it did not, right? Notice it pulled down, came back up, down, up, down, up, down, up, down, up. Look to your left. You know now, okay, now this is a strong resistance. So what do I want to look to do? I want to look to sell at these strong resistance zones, right? It wicked it literally 1, 2, 3 times, 4 times, 5 times. And this is how I was able to catch this move. Yesterday, actually, I got in here during London session. I got in at 46.09 and I had a stop loss at 46.17. And I had it above here, right? And that's why I was wicked out because, okay, Sam, why did you put it at 46.17? Honestly, I'm gonna be honest with you, I just wanted to risk less. But I should have said, okay, where's my previous zone at? 46.21. If I never put my stop loss here, I would have been in my original entry from London session, guys. Notice it didn't come back to above this zone. And over here, we had our wicks. This is where your previous stop loss was, right? For this sell, but you notice, okay, consolidation, we're still under this 50. We're under this 200. Now, this is where you would have been able to enter at, right? So this was this morning. So at 7:15 this morning, 7:30 this morning. So for indices, SPX, let me write this out for you. Best times to look at SPX. What time is it? All right, I got 20 minutes. Best time to look at SPX is from 4 a.m. Well, I'm gonna say 3 a.m. Look for setup. And then anywhere from 4 a.m. to 7 a.m. 4 a.m. to 8 a.m., which is basically like London, pre-New York. Look to execute. And then from New York, so opening of New York. So that's about 9:30. I'm gonna put 9:15, like that pre-open to 10. And then, yeah, that's basically when, another time, 2 p.m. to 3 p.m. Right? And these are the important times. These are the times I'm mainly looking for SPX to set up, guys. If I don't find anything I like during 9:15 to 10 o'clock, I'm waiting. Like patience pays, right? So these are the best times. These are the times I look at it, and the best times I recommend you guys to look for it that I was actually able to execute. Okay, literally waking up to TP smack every single time. Yes, this is being recorded. Aaron will be dropping this on YouTube, so definitely you guys can tune in. Okay, so boom, we got our 4 and our 50 crossing. Beautiful entry we have here. So at 46.09, you could have entered, right? Then notice how we're staying up, we're below the 50, but we're staying below it. We're not coming back above it. It's wicking, 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 wicking. Got the drop down. Boom, beautiful. Now we got something called our golden cross. Our golden cross is when you have your 4, your 50, and your 200 crossing. If you got your 4, your 50, and your 200 crossing, guys, just know, hold that trade, right? Hold that trade, because now the trend is changing, okay? So boom, let's say we entered here, right here at 4,600, right? Because that was the close. Our stop loss will be the previous zone, which is 46.09, but I would have put it 10 points. So it would have been right here, like 46.10. And I want to put it outside of my EMA because I know price always wants to pull back to the EMA. So even though we got this here, we need a little correction, right? So let's go here, right? Boom, entry. Let's put stop loss at 10 points. Right? And you guys let me know. We came close to stop loss, but we did not hit stop loss. Right? We came very, very close. Like literally very, very close. But we did not hit stop loss, right? Because we noticed, okay, it's pulling back to that 50. Now, if you were to get a close above the 50, then you would know, okay, my trade is no longer valid. You know, but if it wicks, even if it wicks my stop loss, usually I had put in a mental stop loss, because if it wicks it and it comes back down, I'm gonna be tight, right? Because sometimes that happens to me. That's what I was noticing. So I will put a mental stop loss. I will manage my trade, right? And go ahead, and you see it wick right to the 50. And what did it do? It dropped right back down, right? So if you didn't catch this entry here, right, it crossed down again, you were able to catch this entry right here, right? You were able to catch this entry at the close of this candle, right? Boom, again, stop loss hit. No, literally, you were about 5 points, excuse me, in profit. I mean, in drawdown, 4 points in drawdown. Good pop, re-entry. And what did price do? Literally came back down. Notice how it's breaking high time frames, guys. High time frames. It's broke the 1 hour. Continuation, continuation, continuation. What did it do? Break a daily / 4 hour. What did it do? Came back into this strong buying zone. Notice how I had this strong buying zone. 45.33, 45.37, already previously marked up from this example that I gave you guys earlier, right? That was this right here, this example that I gave you guys earlier. So I know this is a strong support. Look to your left, come back. Nothing's here, nothing's here, nothing's here, nothing's here, nothing's here, nothing's here. But you got this wick into here, right? So how did I know it was gonna come down here? I'll even look on a higher time frame, right? Let's go to the 1 hour. Guys, we had our 4 and our 50. Let's do this. We had our 4 and our 50 crossing on a 1 hour. If your 4 and your 50 cross on a 1 hour, on a 4 hour, I always take it back to the 200. Always, 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 always take it back to the 200, because it has to pull back there, right? It has to pull back. So even though we're in an overall uptrend, right? We're in an overall uptrend. I know if price is crossing now below our 50, it has to come back down to our 200 on this higher time frame. So I was able to just automatically, instead of going for 5, 10, 15 points this morning, I was able to say, okay, I'm swinging this trade because I got a 4 and 50 on a 1 hour time frame. And then notice on the higher time frame on a 4 hour, it pulled back to the 50 on a 4 hour. Okay, so it pulled back all the way to the 50. 4 hour. 1 hour, pull back all the way to the 200. But on the 15 and the 30, right, we are crossing below the 200, and that's how you were going to be able to execute. Even if you were on the 30-minute, guys, and you got this cross here, and you wasn't able to catch that higher entry, you were still able to catch 45.55. And what are you doing? Taking it down 20 points, down to 45.37 or 45.33 into that next zone, Okay, so drop some fives in the chat if this makes sense, guys. If this makes sense. Beautiful, beautiful. So again, if we get our 4 and our 50 crossing below, you want to look for a sell. If you get the 4 and the 200 crossing below, you want to look for a sell, right? Price, if it crosses on the 4 and the 50 below, it's always going to pull back to the 200. Okay, if it's coming back where their space was, it has to fill that space, guys. It has to fill that space. Okay, so that's pretty much, guys, the strategy in itself, right? Let me see if I actually could give you guys a setup in the next 2 minutes before we get out of here. How does that sound? Drop a 5 in the chat if you guys want to set up. I feel bad for all 10 people that left, right? Because tonight you guys are going to be able to make some money. Okay, and it's tag me when you guys make some money tonight or in the morning. All right. So let's see what we got going on here, right? So I see, okay, we're below this 200, we're below the 50. I definitely want to look for sales, right? So what I will look for is for, let me see, on the higher time frame, we got the 4 hour, it pulled back to this 4 hour. Wow. Okay, guys, if we get this 4 and this 50 cross, what's this at? 45, 49, 45, 37. Okay, so if we get a break and close below 45, 35, I like that for a sell. Okay, so I'm actually gonna write this out. So you guys can go ahead and mark it up yourself. Break and close below 45, 35 for a sell. TP1 is gonna be 45, 30. TP2 is going to be 45, 25, and then TP3 is going to be 45. All right. Yeah, because this 50 EMA, guys, is that 45, 37, 45, 35 level. So I definitely like that if we get the cross. This 1 hour structure is 45, 20, and then boom, you see how beautifully 45, 20, which is TP3, is this 1 hour support. Now, if we break and close below that, definitely swing it back into this 45. What line is this? 44.86. 45. Which one is this? Because 45.86. I got so many lines in here, guys. Sorry. To 44.99. Okay, so 44.99. Okay, that's why if it breaks 1 hour structure, you know you're taking it back down to 44.99, 44.87. Okay, now we all have to see how this acts. So now if we get a rejection off of this 50, right, off of 45.37, breaking it down, right, down to the 1 hour, down to the 15, 30 minute. Let's go to the 30 minute, right? You see how this 4 is now like curving, guys. It's curving. We got rejection, rejection, right? Not flat top. So I definitely just want to see what this does. If we get a break and close above 45.55, let me write this out. Oops. And then we're gonna get you guys out of here. Break and close above 45.55. CP1 is gonna be 45.55. That 4 hour zone. So I definitely like it coming back up to this 45.76. So we're gonna make TP1 45.65. TP2 is gonna be 45.70. And then TP3 is going to be our 200, which is 45.75. Okay, and then for your stop loss, we're gonna have below this wick, which is 45.47. So we're just gonna make it 10 points. SL is going to be 45.45. Okay. 45.45, which I definitely like over here. Yep, because that was a previous support. And we got the rejection here. So I definitely like if we could break and close above 45.55, but like for the buy, take it back up to the 200, see what it wants to do. If it wants to come, give us this correction, because this is a strong impulsive move. We need a correction. Like it needs some type of correction, guys. Like it literally fell through. So we need to see this at least retrace, maybe they're in London. And then, for tomorrow, New York, it's Friday, see the continuation down into these areas. Okay, to take these wicks, definitely see it coming down to 45.20 again. All right, so that's the call, guys. Who enjoyed that call? Like, did you guys screenshot this? Hold on, before I stop sharing my screen. Where's the cell that I wrote out here? Okay, so I'm gonna put these side by side. There, screenshot this, guys. Screenshot this. Make sure you guys have these parameters. All right.
Are you serious?
How you feeling? Oh, for the sell, hold on. Let me get them a stop loss for the sell. 45.35. It's 45.35. We're gonna make it 40. We're gonna make it this buying zone. That's too much. That's a 20 pip stop loss. Damn, I can't even give you guys that. Just make it 10 points, 8 to 10 points. Based on your risk. So I'm gonna say anywhere from stop loss could be anywhere from 45. I'm just gonna make it that. Okay. Beautiful, beautiful, beautiful. All right, so make sure you guys have this screenshot. All right. Hold on, let me share my screen one more time so you guys can take this screenshot. All right. But yeah, guys, this is literally what I use. And then once you have these markups, like you literally can just reuse them. You'll notice old buys become new sells and old sells become new buys, right? So definitely get a spreadsheet, track your trades, stick to one pair, write down the times. You're going to find the time that you're, going to be trading and things like that. Like that's going to work out for you. And when it does, I'm going to be so, so proud of you. If you have any questions, you guys all have my Instagram. Again, it's s.marieeeee with, I believe, 6 E's, I want to say. I know I probably dragged it. But, definitely feel free to hit me up on any MA cross analysis that you guys have, or if you guys want my opinion on the markets, hey, Sam, what are you thinking about this? Like, I'm definitely always willing to educate, always willing to teach, because that's what I love to do. That's what makes my day. I want everybody to have the feeling of waking up to a blue screen, waking up to TP's hit, guys. Like it's amazing. And it's just because you took your time to study a skill, you took your time to apply a skill that you learned, then like that's really up the score.
Oh my God, family. Look, so I'm gonna go ahead and drop the Instagram for Miss Douglas, because man, she just gave us the I think that's what, 6 E's? After like the third E, you gonna find it. After like the third E, you gonna find it for real. So funny. That is the Instagram, s.marieeeee. I really, really love the fact you guys got on this call. Be on the lookout for the YouTube link. I'm so excited to give you guys this information. Get off the call. Go get on the call, Bryce. I love y'all. We out of here. Let's get it.